You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome back. Today we're diving into what feels like a special Founder Fridays for FinTech, maybe.
Yeah.
Because honestly, this whole space is just moving at lightning speed.
It really is. You see companies launching, reinventing, sometimes making these incredible comebacks.
Yeah, it's a wild ride.
Yeah.
So let's try and unpack some of the really big moves that are changing how we handle money and business.
And it's crucial, right? Finance isn't just sort of evolving slowly anymore. It feels like constant disruption. We're seeing new players, established giants. Everyone's pushing boundaries.
Definitely. So let's kick off with maybe a story of resilience. Klarna, their journey's been, well, quite the roller coaster. What's the latest with their IPO? It sounds like big news.
Oh, absolutely. Klarna just pulled off a huge $1.37 billion U.S. IPO. They sold shares at $40, hitting a $15 billion valuation.
$15 billion, wow.
Yeah, and what's really telling is the demand. Apparently, it was oversubscribed 25 times. That's, massive investor confidence returning.
25 times.
Yeah.
That's incredible,
Yeah.
especially after their dip a couple of years back.
Exactly. They bounced back from that $6.7 billion low in 2022 after being way up at $45 billion in 2021. It shows the model has real staying power. And firms like Sequoia, they made something like $2.7 billion on their investment.
Huge gains.
Yeah.
Okay, so speaking of big debuts, what about Figure?
Okay.
Founded by Mike Cagney from SoFi, right?
Mm-hmm.
They're aiming high too, like $4.13 billion valuation.
That's the target. And Figure's showing some serious growth. Over 60% revenue increase this year, I think. And they swung from a $52 million loss last year to a $20 million profit.
Okay, so what's the tech angle there? What makes them stand out?
Well, they're heavily using blockchain. They've funded $17 billion in home equity loans across almost all states using it. It's not just digitizing, it's, building new rails.
Right, using tech fundamentally differently. Okay, let's switch gears a bit. Challengers versus giants, Ramp. 6 years old, $1 billion in annualized revenue, 45,000 businesses. That's fast.
Incredibly
They
fast.
started with a cashback card, yeah. But now, can a company like that really challenge someone like American Express? What's their play?
Well, their $22.5 billion valuation certainly suggests they think so. And yeah, they started with the card, but they've rapidly built out this whole suite, AI-powered expense management, bill pay, procurement.
Ah, so it's the platform.
Exactly. It's about managing the entire spend life cycle, using AI to make it smarter. That's how they're trying to chip away at Amex's, huge corporate card market share.
Okay, but Amex isn't exactly standing still, are they? I mean, their network is enormous.
No, not at all. Amex has been expanding like crazy. They're accepted at, 160 million places worldwide now? That's almost 5 times more than just a few years ago.
Wow.
And in the U.S., they've basically reached parity, 99% acceptance. Plus, their cardholders just spend differently, way more, both in the U.S. and internationally, compared to Visa or Mastercard users. Very valuable customers.
So Amex is definitely holding its ground.
Mhm.
But are other big banks just watching challengers like Revolut eat their lunch? Or are they hitting back?
No, they're adapting too. Look at Ireland. You've got AIB, Bank of Ireland, PTSB. They're teaming up to launch something called ZipPay early 2026.
ZipPay.
Yeah, basically a direct competitor to Revolut. And they're automatically enrolling over 5 million customers right off the bat, using their scale,
Interesting move. Okay, this next bit is fascinating. AI. We're hearing about AI coding platforms facing, crippling CodeGS. What is that?
Right, crippling cost of goods sold. It basically means for these AI tools, especially coding ones, the cost to actually run the AI, the tokens it uses, the sheer computing power needed is incredibly high.
So the subscription fees don't cover the cost of usage.
Often, yeah. It makes the standard subscription model really tough, maybe unsustainable. The insight here is that these AI-first companies probably need to integrate embedded finance.
Embedded finance.
Yeah.
Like payments, lending.
Exactly. Weave payments, lending, maybe even commerce right into the platform. That way, revenue gets tied to customer activity and success, not just a flat fee. Suddenly, a head of payments becomes critical for growth.
Clever pivot. Okay, and speaking of enabling things, what are the big networks? How is someone like Mastercard helping banks and FinTechs manage all this?
Well, Mastercard just rolled out their on-demand decisioning tool, ODD. It lets banks and FinTechs set their own authorization rules directly on the network.
So faster, more flexible decisions.
Yeah, instant approvals or declines based on their rules, better security, more control, all in real time.
Wow. What an incredible tour of the FinTech landscape today. Klarna's comeback, Figure's ambition, ramp challenging Amex, the whole AI cost thing. It's moving so fast. That's why I love doing vocal technologists.
It really is dynamic. And, despite all this, FinTech's total market cap is still only like 4% of global financial services. And that sector is, 20% of the S&P 500?
So still just scratching the surface then.
Pretty much. There's a huge runway for more growth, more innovation.
An exciting thought to end on. So, with all that in mind, all these changes, these innovations, what do you think is the single biggest opportunity, or maybe the biggest challenge, facing FinTech founders right now? Something that you want. Thanks for joining us.
Spoken Tech, for your ears.